the CEO of Ambit Asset. Hi, Sushant. Good to be speaking with you. Sushant, the consensus call in the market right now is stay with the large caps, stay with the financials maybe, and stay away from some of the high PE counters and the risk beta names. Give us your sense on the markets. How are you playing the weakness, and what's your sense that are we near to the bottom levels, or there could be some more pain in the times ahead?
Thanks for calling on the show. Definitely, there is pain in the markets, and it's not going in a rush. It will take a few weeks, few months probably for the things to bottom out in a sense where again risk on sentiment will come back, but it will take some time. Our view is that rather than worrying about what the P is or rather than worrying about which sectors, one should be focused on stocks where earnings are visible in the near term or not, because that's where the bulk of the pain lies. Where last few years, FY 22, 23, 24, the earnings season was amazingly well. Almost every second company was delivering 20-25% earning growth. So earnings were quite broad-based. But last few quarters, that has subsided a lot. Probably in this quarter, while most of the results are out, we believe that less than 20% companies would be delivering 25% earning growth in this quarter. If you look at the top 500 companies. From that perspective, one needs to be really sure of what price you are paying for the earnings which you are seeing in the near term. And it's more numbers than narrative. That's the mood of the market at this point of time, compared to about a year back or more than before that, where it was more narrative than numbers.
Sushant, hi, good afternoon. This is Ankita also joining in. Sushant, right now the market is adjusting its fair valuation multiple also in this market correction and pricing in, of course, the earnings for the companies as well. How should one, strategize at this given point? Are there any pockets of value that you see, in this correction and, after the fair valuation adjustment, where do you see value?
Yeah, so from a long-term perspective, I think there is enough value in many companies and sectors. From a short-term perspective, value is just, I think, probably more in large caps and financials primarily there, because that's where the multiples are probably less than what they were during COVID as well. Not too many pockets beyond that in short term. And by short term, I means next 3 to 6 months. But from 1 year plus, I think there are many sectors, be it pharma, be it IT, be it FMCG, financials in addition, where the long-term prospects are good. And right now, because of the sentiment in the market, which is risk-off sort of, there is quite a bit of value left in those sectors in many ways, where in many cases, the earnings growth in the next 1 or 2 quarters might be challenging, but from a long-term perspective, the stories are intact.
But Sushant, since the start of this particular year, the narrative has changed. The narrative, especially for the emerging markets and Indian markets, have changed. While we are seeing some of the European markets, US markets, they are touching new highs for themselves. And we are talking about some of our indices getting into that bear grip. What has changed in your portfolio, and how are you churned your portfolio since the start of this year, and how are you looking at to make even more changes in the times ahead?
We have not made much changes given the global context of trade wars, which has been, I would say, stimulated by comments every day from the leaders, political leaders globally. The economic side of the balance sheet is not changed much in that time period. So stories are same, narratives are same, numbers are same. It's just the hypothesis sort of is more risk off because of the varied comments and probably tariff sort of restrictions which might come into play and might disturb. If you look at from India perspective, we have not have much of export play beyond IT services in pharma. And those are sectors which I would say will not have much of IT services and which will not have any tariff barriers. But pharma, there might be some tariffs, but not in big term because it impacts inflation as well as these are life-saving drugs. We believe that that will not have a big toll. From this perspective, we have not made much changes in the portfolios, although our patience level with our companies in our portfolio definitely is coming down. Wherever we see that in the near term, the profit growth is a bit challenged, we are reducing weights, not necessarily going out of those lanes, but reducing weights and definitely putting more weights behind where earnings are more sanguine in the short term.
Right. Sushant, in that case, like you mentioned, that you are not really getting bearish about, a particular space, but you're rather reducing your weights and you are allocating to perhaps where you see earnings growth coming in. Could you mention the sectors where you actually seeing these value?
Financials, definitely there is good value from that perspective. From an earning growth perspective, if you look domestic consumption, I would say is reasonably well still. Many pockets of discretionary side, there might be some challenges, but non-discretionary as well as lower side of discretionary, their challenges less available. On the rural side of the economy, I think those sectors which are focused on that, we see good earning growth pickup. The Q3 results were quite good on that side, and we expect them that in Q4 and Q1 of next year again, there will be some good pockets of earning there.
Sushant, we just touched upon the pharma space, so I also have a question from that. Since there's a lot of news flow, and the consensus view right now is that there should not be much of an implication or an effect on the Indian pharma majors, given the kind of dependence of US on the Indian generic players. But the news flow is weighing heavy, Sushant, because on the index front as well, and some of these large cap pharma names are definitely reeling under pressure. But if one has to be really constructive in this place, do you believe that this is a good time to go ahead and increase your exposure rather?
Yeah, no, definitely. I think the long-term story remains intact, and as you rightly pointed out, that there is no choice but to buy from Indian companies in that space. It's a consolidated market, and the supplies are limited in terms of where distributors from US and other markets can go to get their supplies. India remains a preferred place to supply, both from a quality perspective, speed perspective, as well as from a cost perspective. So thereby, the long term, I think, remains intact, and that's why these are sectors where, because of the narrative and the shift in talks from quality leaders, there are some opportunities which are available for investors, I would say, to make money in the next few months.
Right. Also, Sushant, I want to get your take on, I believe you have your exposure in IT as well. What's your take on the IT sector? Does it look favorable to you now? Is there more increased opportunity? Of course, there are more opportunities in the US opening up for IT. Also, there are some currency tailwinds as well. So, do you see value in IT at this juncture?
Yeah, definitely. I think currency led margin expansion as well as the economy in the US is quite upbeat still. And there were fears for recession for last two or probably more than a year or that, which had led to not too much of expansion of projects, which I believe is now coming into play. And the next few quarters, we should see good results from IT companies, and thereby they also, I would say, give an immense opportunity for investors in the next 3 to 5 quarters.
All right, but apart from IT, Sushant, any take on the metal pack as well? Because, see, in terms of the flows, what we are getting to understand is that still there are some of the funds that are shifting from India to China market, given the valuation, and even today we are seeing that case happening in terms of the market move. So, do you believe that it could be a decent time for the metals in the times ahead, and one can actually look for a bounce in that?
Metals are quite cyclical and very, the cycles are not too long. I would be cautious on which names to invest within. Definitely, in pockets, there will be opportunities, but one needs to be with the leaders who are having cost leadership because any bump up in the prices will first increase and boost their profitability and thereby making money for investors. So I will be selective on metals.
All right, Sashant, thank you so much for joining us and weighing in the markets and how the markets should be played at this current juncture. Thank you so much for joining us.
You.
And well, with that, it's time for us to slip into a short break. Don't go anywhere.